Hi folks, today I'm here to talk about trading horizontal lines, or trading support and resistance as it may be known. Trading horizontals is using previous price reversals to determine where price may reverse in the future to look for your best entry into a trade. It is a highly profitable trading strategy and can also be used to find new places of price action. It is both useful for trading and investing. We're looking for the ideal entry in a trade and looking for reversals in growth stocks to find where would be a great entry. In this video, I'm going to talk about rules that apply to horizontal trading, and then I'm going to go through a few charts in real time to show you how to actually use it. Enjoy! What are the benefits of horizontal trading versus other styles? First of all, simplicity. The patterns are very easily recognizable. This can take the least time to recognize areas of buying or selling. Also, it relies only on price action. No other indicator is needed, such as volume or RSI. Better success over trend line trading. This may be personal opinion, but having kept a trading log of my trading style using trend lines versus horizontals, there was a 15% higher success rate. Also, see my bull flag video for analysis of bull flags and why I don't think they work. And finally, fantastic for great entries and exit of trades and a higher risk to reward ratio. Price zones, are definite. It is clear when price is being broken. Continue watching for an example of stop loss when used with horizontal lines. So here we have the Ethereum to Bitcoin 1D chart, which appears to be ranging over the last period of time. What we're going to do is we're going to use the principle spoken about earlier to determine if there is a horizontal line of interest in play, namely support to buy or resistance to sell. So what I'm going to do, I'm going to look at the chart, see are there points where rejection begins. There's 3 points of support we can see straight off the bat. We can see a line that broke it, stayed below that line, and here we're sort of close to it again. So what I'm going to do is draw a horizontal line starting at the tip of this one, initial, drag it all the way across. And what we have to remember is these aren't specific lines, they're not of any size, they can be any size you feel, but it's the rejection zone that we have to see. So there's the start of rejection zone, this is also inside it, this is also inside it. Broken through here. Once it returns, breaks above, but now with conviction, and rejected down. And that's what we're seeing from this here. So bounce, 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 break, and reject it again. And that's how we'd like to play that line. Now, coming down below, we look for a line of support. As this would now be a line of resistance, I'm just going to make it red. And now see 2 points of support here, so ideally this is where we'd look to buy again. So once again, very bottom, drag it across, pull up, and I'm going to make that green. So bounce, slight bounce there, slight bounce there, price rises, gets rejected, and this would be our zone of buying. That's what we'd hope for. And anything that's broken below that, can expect to see some awful price action. Once again, we will look at these principles to determine our lines of support and resistance, this time on spot gold to US dollar chart. So straight off we can see 1 point of resistance, second point of resistance, third and fourth. They're all pretty much in the same zone, not too much distance between them. There's a clear rejection once it happens. Then up here, you can see it's clearly broken above our line, slightly retested it maybe 2 or 3 days after it broken through, and from there on the price is catapulted. So what I'm going to do, I'm going to start as usual, at the very top of the highest point, drag my line across, straight down just to include these tips. So that's where the majority of the price action happens. to there. So that's going to be my support line now as price is broken above. So with current price action, we can see it's heading down towards here. Ideally, this would indicate our main entry point if we're using this trading system. Now, one more thing we can look at for this. So this will provide an opportunity to show how easy it is to reduce risk with this trading style. So what I mean by that is the most recent price action that's been happening. If we zoom in on this, you can see a good example of this could have been seen as a support and resistance point. So I'm going to draw that in anyway. And usually I would use that as a point to buy. We can see price went straight through, did not take it whatsoever. But this is where this trading style comes in handy. So what we could do is we could set along, say anywhere around here. But because we have such strict price determination, we know that anything that is broken below that point, our trading strategy has been voided. So anything below, we know that that is going to cause a straight down price action. So we set our long high and we set our risk very low. Something like that would work out very well. We would have closed out our trade once it broke below because we have no determining factor to say that it's going to go above by using this trading style.